Hi everybody, my name's Steph Adams. I'm with Guaranteed Rate. I am a renovation loan specialist, and I wanted to talk to you a little bit today about what a renovation loan is, how it works, kind of give the quick process here to help you know a little bit more about it and what you might be getting yourself into. So, renovation loans, first of all, get pre-approved, okay? Let's see how much you can qualify for. Let's say that you're pre-approved for $100,000. If you're pre-approved for $100,000, then that means you could buy a house for $80,000 that would need an additional $20,000 for the renovations. 80 plus 20 is $100,000. That $100,000 is your total acquisition cost. Your down payment is based off that total acquisition cost or that $100,000. So for FHA loans, which are owner-occupant loans only, by the way, the minimum down payment is 3.5%. So you're going to take 3.5% of the total acquisition cost, or of that $100,000 in my example. So 3.5% of that would be $3,500. That's the down payment. Don't forget there's closing costs as well above and beyond that. We'll talk about that at another time. So you're pre-approved for $100,000. You find this house. You write the offer for $80,000 to purchase it, okay? And then, listen, we need 60 days for closing. Typically, this is a 45 to 60-day process. I highly suggest go ahead right from the get-go and ask for 60 days. Your realtor will need to go ahead and put in the contract that you are doing renovation loan, so they can check FHA, they can check conventional, whichever one we pre-approve you for, and then they're also going to put in the other section, they're going to put in renovation financing. That's going to help tell everybody what we're trying to do here and why we need more time to get it done. So, pre-approved for $100,000, you find the house, you write the offer, you get the offer accepted. The next step is going to be, with any other home purchase, would be to have a home inspection done on the property. With renovation loans, my personal and professional experience in 2 cents is to have the HUD consultant go ahead and come out during that time frame. And I typically say in lieu of a regular house inspection. I know not all home inspectors are going to like that I say that, but because realistically, it's a mandatory part of most renovation loans that the HUD consultant or a renovation consultant comes out and inspects the property. The whole goal there is going to be able to tell you what you have to do, okay? What those required repairs are. They're going to tell you what those are, and they're also going to give a ballpark cost of how much those repairs would cost from a general contractor. Now, based upon that, I call that kind of a blueprint, if you will. So you're going to take that report and you're going to find a contractor, okay? Maybe you already have one, hopefully, because that definitely is beneficial if you already have someone to work with there. As far as the contractor goes, you get to pick the contractor. A couple things who it can't be. It can't be someone related to you. It can't be you, and it can't be your employer. They have to have liability insurance. If they have employees, not subs, but employees, they have to have workman's comp. And they are going to give us a bid for, at minimum, those required repairs that the HUD consultant or that third-party renovation consultant gave us a list of. You can go above and beyond that. You can do more than that. Maybe the kitchen hasn't been touched since, the house was built in 1992, and you want to update the kitchen. It's fully functional. It's totally fine. It's just you want to have an upgraded kitchen, different countertops, different cabinets maybe, new appliances, things like that. You can do that, okay? You can go above and beyond as long as you can, afford it. And as long as the appraisal will come in. So let's talk about that. That's really the next step. Once we have the contractor bid, then we can order the appraisal. The appraiser is going to take that purchase contract for 80 and take that bid for 20 and go out to the house and give us an after improved value. So of course we want it to come in at least $100,000, right? Because that's your total acquisition cost. And they're also going to tell us that based upon the bid provided, the house will meet or exceed minimum property standards. That's also how we can lend more money than you're buying the house for in its current condition, because we have a bid that's telling us that we're going to fix these things as to why you can't get a regular loan on it right now. Once we have the appraisal back, we send everything back to underwriting. Part of that process as well is vetting the contractor or validating the contractor. So we're going to ask for their liability insurance, and they're going to fill out some paperwork with us. There are different requirements for the higher the dollar amount for the bid, If it's a $100,000 project, we're going to require that that contractor, that your general contractor, have been in business, being a contractor at some level, if not having their own business for at least the past 10 years. So there are some different levels with the contractor piece for sure. But all that, let's say that we've got the contractor validated, the underwriter's going to give final loan approval. Once we have that, we'll schedule the closing. Once we schedule the closing, you'll obviously bring your money, your down payment and closing costs to the table, and you'll sign your life away there, and then you're a new owner of a home. That's actually when you close on the house, that's when the house becomes yours, right? And that's when the contractors can actually start the work on the property. So during the loan process, we do all the legwork. We get everything put together. We figure out what needs to be done, how much it's going to cost, and again, the appraisal, right? So once the loan closes, the work can start on the house. Depending upon the scope of work that's being done, and again, typically, okay, it's going to be, let's say it's a greater scale, maybe, over $35,000 worth of work, or maybe you're doing anything structural in nature, then it's going to be proof in the pudding is how the contractor is going to get paid. They're going to need to do something in order to get paid, and we actually, that HUD consultant or that third-party renovation consultant is going to be the one that comes out to do the draw inspections in order to help us get that contractor paid. They will work with our draw department and then disperse funds as required. There is a max of 5 draws. So the contractor, they can do 5 inspections and they can get paid 5 different times. We do allow in certain situations, we will allow for upfront monies to be given for certain things. So that's something to know about as well. During this time, you're going to be making your monthly payment like you would on that whole, $100,000, if you will. It's not 2 loans, it's all 1 loan. So it's going to be at a fixed rate. Once the renovation's done and once you made at least 7 mortgage payments, if rates are lower at that time, we're happy to refinance you out of that as well, get you into a more manageable payment and hopefully into a lower rate. That's kind of the nuts and bolts, quick little rundown of how renovation financing works. Definitely happy to talk with you more about any project that you may have or get you pre-approved if you haven't already been. My name is Steph Adams again, renovation loan specialist with Guaranteed Rate. You can reach me at 513-384-0041. You can check out my website at stephadams.com. Steph is STEFADAMS, stephadams.com. And my email address is steph.adams@rate.com. Please feel free to reach out to me. I'd love to help you and get you into a home that you love.